Hello, welcome to another. So you're welcome to another training session from Jewish Academy. It's still Sarah Bamba, and I hope our previous videos have been helpful for you for your learning and everything, and it has improved your trading. So today I would like to talk about something very important in the market. I know that some persons keep saying that my stop loss, the market keep haunting me, keep haunting my stop loss. It will hit my stop loss and go in the right direction. It will do this and that and that. And maybe they just blame the market for all those stuff. The thing is that what some traders have not understood is this. It is not really about your stop loss. It is not really about where you put your stop loss or having a tight stop loss, because that is what some traders really think. My stop loss cannot be above 50 pips. I will anytime I go into a trade, my stop loss must be 50 pips. Now that is actually not wrong in itself, but it is wrong when other factors are considered. Now, for instance, before you place your stop loss, one of the things you should do is to know where the market is at the moment. Where is the market? Is the market trending? Is the market at a major zone? Or is it reversing, or is it a pullback or a retracement? You should know these things before you think of where your stop loss should be. So for instance, I have this trade. Let me zoom my chart, or let me take it to a higher time frame. Let me take it to a higher time frame, so that a lower time frame, sorry, so that you can see. So for instance, I have this Euro USD here. Let me use the 1 hour time frame. And the market was selling, or maybe, yeah, this market was just trading up and up and up and up. I say, okay, for me, okay, let me say the trader just says, I don't want my stop loss to be above 20 pips. And you don't want your stop loss to be above 20 pips. Cool. That's fine. And you come to enter a trade at this point. You're wrong, because your 20 pips will be around this place. And a simple reversal or a pullback can quickly take you out of the market. You understand? So maybe you say, okay, now I don't want my trade to be above 20 pips. Fine, it's cool. You have a good tight stop loss. And when you enter your trade here, put your stop loss here, which is like almost 20 pips or thereabout. And a little pullback in the market takes you out of the market. And the market will still reverse and go in your direction. So how should you set your stop loss in the market? Before you take your trade, hope you know that one thing you should know about stop loss is a risk management technique. So you need it, you must use it. But while you're using your stop loss, you must use it well. So I want to tell you why. I've told you why your stop loss keep getting on, why you keep getting stopped out of the market. So you must not just, don't stick to a particular stop loss per se, except the market conditions are right. So if the market conditions are not right, you shouldn't just get on with one stop loss and say that must be your stop loss, regardless of where the market is at the time of your entry. So I've given you the example. You cannot just, in a trending market, you cannot just put a 20 pip stop loss and say the market will always do this. The market will always pull back. The market will always retrace. So you should place your stop loss in a way to cater for retracements. So if you are entering the market from major zones like support or resistance, it's cool. Your stop loss can be 20 pips, just that you have to spot it early. You have to spot it early enough. Now, for instance, this zone, if we zoom to the higher time, for this is resistance, so that's why my horizontal line is here. This is support, that's why my horizontal line is here. And this this gave me a beautiful head and shoulders and started coming down. So let's go to the higher time frame and see. So where should, if I want to enter a trade like this, where should my ID stop loss be? Where should my ID stop loss be? Now for a trade like this, I will place my stop loss above this resistance. This, if I enter my trade after this bearish pin bar is formed, my stop loss should be above this, regardless, even though it's 30 pips, I don't even care, or else I leave that trade, because this is the safest place that the market will not get to. Why? This is another one resistance that is here. This is a resistance. I think if I zoom back, I can see that this is a strong resistance. Let me see if that is possible. I think okay. If I zoom back, okay. Let me just leave it. But if you can see clearly, okay. So this is kind of a resistance area. This is a resistance area. So since it is a resistance area, I should be able to put my stop loss above that resistance area. Why? Because the market 90% of the time, the market will not get there. So it's not about just having a fixed stop loss. Know where your stop loss should be. For example, now this is a support. If I enter this trade here, this gave me a bullish pin bar. I should put my stop loss below this zone, because this is a support. So it was tested 1, 2, 3. So there's every possibility that if this market is even coming down, it's going to reverse from this point. So my stop loss should be below this zone, not just I always trade with a tight stop loss and all of those stuff. Yes, it's good to trade with a tight stop loss, but know where you are at the market before putting a tight stop loss, so that in case of a pullback or reversal, you won't be hit. And it will be like, this market is after me. No, the market is not after you. That is how the market works. So you need to go in line with the market. Now, let me give you another example here. If I'm to enter this trade, like this is like somewhat a confirmed down trade, the market should get here. Or let me check my daily time frame and see. Okay. Yeah. Bearish pin bar, the market continued dropping. So the market respected this support that was created here. And I believe the market should continue dropping, kind of. Let me see. Today is the end of the week. So let me see the weekly candlestick that was, okay, kind of a bearish candle. So the market should come to this point before going up again, if it will. But I'm going to draw a big trend line like this. The overall trend is a bearish trend. So, like I was saying, I wanted to give you a good stop loss. If I were to enter a sell here, my stop loss should be here. So two things will be involved here. If I won't place my trend line, let me use a trend line to indicate where the next pullback should get to. So from here, I put my trend line here. Okay, you see where the two meets. I think that's a good place. You see where both meets. I'll put my stop loss below. I'll put my stop loss above those points. That is where I'm going to put my stop loss. Not just using a 20 pips fixed stop loss, and not that it matters. So is either I wait for this market to get here and start dropping, I'll put my stop loss above it. Or if I want to trade now, still put my stop loss above it. So know the right places to put your stop loss. Put your stop loss above a major zone, or above or below a major zone, like the support or resistance, or possibly a pullback, where the market will, even though it's a retracement zone, sorry, where the market, after the market retraces to this place, I can put my stop loss below here. and continue. If you want to use big stop loss, it's not advisable to use big stop loss though. But if I want to over enter my trade, then my stop loss should be below this place, not necessarily 20 pips, because this was the last retracement. So the market will not come down again to come and retrace. You understand? The market will retrace. I can even draw my trend line to know possible retracement zones. So don't just put your stop loss just 20 pips and 20 pips. Have a fixed stop loss. So even though you are trading with a fixed stop loss, if it is not at the above or below a major zone, you should not take that trade. You shouldn't take that trade. Just wait till it gives you your 20 pip stop loss in that areas. That's when you take the trade, so that you'll not be a victim of stop hunting. You'll not be a victim of stop hunting. So whatever you want to do in the market, just know the last level it was. That's when you take your trade from. If you want to join the trend, wait the market pulls back so that you have the tight stop loss you want, or put your stop loss at the last pullback or retracement so that you can join the trend. I believe this should be helpful in your trading journey. It's still Sarah Bamba, Zwish Academy. Do well to like my channel, do well to comment, do well to share and subscribe. Click on the notification button so that whenever I upload a new video that will aid your trading journey, you will be able to watch. Till I meet you next time, goodbye and trade well.